The opinions expressed in the following podcast are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security or investment product. It is only intended to provide education and entertainment about the financial industry and the stock market. Enjoy.
On this episode of Pennies Going In Raw, we discuss this week in the market, reviving your account this Easter, and LTNC.
Hey, yo, check 1, 2. This is Flavor Flav in the building for the Atlas crew.
Atlas Trading, what the fuck is up?
There are traders, there are prodigies, and then there's legends.
We're up 4%, baby.
No way.
4 fucking percent.
Buy the fucking dip.
Hey, who told me about IDEX?
Like, dude, what the fuck? Like, someone just made, like, a lot more money than me on my trade.
You find out life's this game of pennies.
Did you check the portfolio?
Pennies. The margin for error is so small.
I bet Warren Buffett never did that.
And they out there making money right now off of penny stocks.
Them two guys is putting in work to make y'all rich.
The pennies we need are everywhere around us.
Time to think big.
Pennies Going In Raw.
Featuring Dan, Deity at Dukes, and Hugh Honey.
Produced by Vinny Strokes, baby.
This episode is brought to you by Benzinga. Benzinga has our favorite scanners, news alerts. It has everything you need when you trade to ensure you are at the top of your game. But it doesn't just stop at their app, which you can get 2 weeks free at pro.benzinga.com. That's pro.benzinga.com for 2 weeks free. Their YouTube channel, every day, Monday through Friday, they have Power Hour. They have every single day a live stream where they have guests on. They talk about the news in the stock market, and just the guests are incredible. They've had Mia Khalifa, great podcasters like Dan and Hugh Henney. They have other great traders like Ripster and just a bunch of people that you just would love to hear from. So make sure to check it out at youtube.com/Benzinga. Welcome back to another Pennies Going In Raw. Today is Sunday, April the 4th, aka Easter, and hope you all are having a great 3-day weekend. The market this week, another shaky one, but for at least the small caps, it seemed. A lot of stocks weren't holding up once they ran a little bit, but SPY 400.
Yeah. SPY 400, a new marker, you know? This is, should we get out the party hats? This is incredible stuff.
I mean, people that have been trading for just a year and a half now have seen 300 break and 400 break. And the 200 break happened a long time ago. I mean, I'd have to check, but, you know, it seemed like that
I saw the two. Yeah.
That was a hot
I was going to
minute ago.
say, yeah, exactly. I was going to say, I saw the 200 break and I thought the 250 break was crazy. Now it's like we'll be at 500 by the end of May.
And then we just saw, we're recording this on Friday morning. Job report just came out. You can trade futures right now. What do you think? Does that just keep SPY pushing forward and keep it 420 by 420?
Yeah, I mean, it's definitely possible. We talked about it last week, but we said that once we break out of this range, I really think we're going to go parabolic. And I think we started to see a little bit of that, even though we just broke the range. I mean, we hit 393 and it's just been doom. So I still think that thesis is intact. That's how my strategy kind of going forward is. I think that we've seen a push back to the growth names and, kind of like a rotation. We've been seeing so much money churn and there's been such a big disconnect for like the past, like really 6 weeks. But I think what we saw this week, especially, was a push back to those growth names. Tesla had a crazy week. Tesla just had delivery numbers this morning. So I think all in all that thesis that we're going to be parabolic and that 420 by 420 is more than reasonable, if not honestly 430, 440.
Okay. What about, I know you said pushing back to growth stocks. Could that include any of these SPACs? I know you said with the 6-week range, that was kind of, there was a disconnect. What do you think SPACs and all these could kind of have a comeback? Because at 6 weeks, that's kind of where a lot of these smaller caps really started to take a dive.
Yeah, definitely. I mean, the growth definitely will help because what gets hit first when the market gets hit first? Growth, especially speculative growth, which is kind of what these small caps are. So I will see it bounce back, but it's interesting that I think it was Goldman Sachs earlier this week put out a special note on SPACs talking about that they're risky investments and that they're looking into the way that it's done. I feel like we knew that this was going to happen and we knew that this was going to come, that eventually I think we were calling it slick money was going to start to rotate into SPACs and that's something to be mindful of. And I think that's, now we're seeing the different broker letter come out and the different regulation letters, nothing crazy, but we are definitely seeing warnings come from, higher up than pennies going in raw in the financial food chain.
Yeah. Well, one stock that's just been surprisingly well, even this past week and throughout the past weeks, obviously a lot of controversy on it. LTNC, OTC stock. A lot of people are in it. It's become a cult stock, and cult stocks have a lot of potential to really run. I mean, it had 2 red days to end the week, but a lot of things didn't. They weren't even big. I think there was a 5 and maybe a 1%er. But I mean, that's nothing when that thing was going up 20% a day. I think a lot of will it replace Gatorade and all this stuff? That's a little far fetched. But I mean, you can't deny that growth, man.
No, hey, we talked about it, but listen, I don't want anyone to lose money. In fact, I want people to make money, but when there's warning signs, those warning signs need to be thought about. And I think that when it comes to, and that's why I specifically stay out of the over-counters, because there's virtually no regulation. It's the gray area of stocks. It's, you can put a lipstick on a pig, but it's still pig. And, that's the biggest thing.
This pig is becoming very fat.
Make your
lots
money.
Of bacon. Yeah.
Yeah.
If you believe in it, hold it, man. I mean, but they're, like we would say with any other stock that's up this much, I would say take profits, but when you say to sell a cult stock, you don't end up on the right side. So good luck to everyone in LTNC. It's been going great for you guys so far, and can't wait to see what it brings. But PGIR does not bash, so we love.
Heed warning signs. That's
yes,
all.
just that's all. Don't say we're bashing it. All we said is just be careful. We love you guys, but moving kind of forward. Obviously, you said the market could go crazy bullish. We could start seeing some moves back into the growth stock. Is there any other sectors, or do you think maybe we could just see these small caps just finally reverse and get called and they'll hold up? But I mean, right now you're just seeing pop and drops.
Yeah, you're seeing a lot of pop and drops, but you are seeing some low floats go, which that's kind of like the way that goes, like low floats and then it comes back to swings. But
do you think? I mean, there's a good bit of low floats. I mean, that'll just hop on the NFT wave, pop out some NFT news, and then
yeah. So the biggest thing right now is going to be. Right now, you're not going for home runs, okay? It's going to be a bunch of base hits. Right now, I think the vibe of especially the small cap world is survive. And what I mean by that is that take your few cents. Like, don't try and take something like CEMI went crazy Thursday after hours, on COVID news. But don't expect a stock to go from or ACY, a stock to go from 3 to 15. Right now, that's not the market that we're in. So take your money. If you get in at 3, take some off at 10, 15% profit, and then let the rest ride with a relatively tight stop loss or trailing stop loss. But then, when the market gets hot again, and what I mean by that is when we start to see pre-market gappers more than 40%. So I think that's what it was on Thursday, was that the biggest gapper was 45%. Most of the stuff that is going parabolic intraday is not starting out up 500%. So that's something to keep in mind.
Yeah, you always mention about, I think you used to mention a couple people would always say, hey, these are the pre-market runners. And you could determine how good the day was. I've actually, I've been keeping that in mind. And past couple days, it seemed like the top runner of the day was only like 20, 30, 40%.
Yeah, exactly. And so what we want to see is, and this is how we know the market's getting hot again, is when we come to the desk and there's something up 400% or there's something up 300%. And then as we go into pre-market, what we really need is one of those 1,000%ers to ignite a sector on fire or ignite small caps again. Because if you guys remember, that's when we know that the algorithms are turned back on. That's when we know that once we get that, what was it, Kodak? After last year it was Kodak, Kodk. I remember some of the best traders that I know lost a few million trying to short it. You have Kodak, and then you had that I think it was
SPCB.
Yeah, I think it was that one. That one went like 1,200%. Like, so when things start to run like 1,000%, that ignites the rest of the small caps. So until we start to see that, take your few percents and get out.
So right before we go into ending the quarter, I guess like everything, I mean, you're seeing the SPY 400, you're seeing Bitcoin back at 60, Ethereum at 2,000, all these big significant numbers, mentally significant numbers. So you almost start to see like a disconnect in like the Bitcoin plays and Bitcoin, kind of like small caps and SPY. I know we just kind of touched on the small cap sector reversing. Do you think those kind of gain, or do you think it just requires because I feel like at 50,000, whenever it first broke, the Bitcoin plays start going crazy. Whenever it breaks at 60,000, it starts going crazy. Do you think now that we're back above 60, if it stays, do you think we just see it keep it up the AEHLs, or do you think they stick on their, we're NFTs right now. Don't call us Bitcoin. We're NFT plays.
Yeah. So I think it's going to be, this is how I think it's going to go. I think it's going to be the usual 15 that usually run, but it's not going to happen until Bitcoin hits like that 65 mark. And that's because kind of what you touched on was like, you said the first time that Bitcoin hit 50K, the first time so I think that for them to really get hot, Bitcoin has to have a real breakout. Because still at this point, like nobody's saying like, oh, 60,000, like, wow, like that's monumental for Bitcoin. Once you start seeing like the news, like Bitcoin, new high and, things of that nature, I think that's when these things will start to get lit up again.
Yeah, in the news. Okay, well, like we just said, we're ending the quarter.
Oh, yeah.
What does that mean for traders? Quarterly taxes. You got all sorts of stuff. Where do we start?
So first we can touch on taxes. So this is kind of the rule of thumb that I've been taught from my accountant, was that the first and second quarter, you don't need to make an estimated tax. That's because you can have a fantastic first quarter. I mean, you can have a fantastic first half of the year and then piss it all away the second half of the year. So the first two quarters kind of just take some out of your account, but you don't necessarily need to do the estimated payment. Once you get to the third quarter, once the third quarter ends, then you make at least a half payment of what you owe. So what I mean by that is that let's just say that throughout the first three quarters, you owe your estimated tax payment is let's call it $5,000 to pay $2,500, so that even if you have a terrible Q4, you at least will, as some of the tax that you will still have, you at least have paid for, and that's kind of the rule of thumb. That's as far as taxes go.
Speaking of taxes, we got till May 15th. Thank God.
Yeah. So federally. you're federally. And so I think it was the southern states. I think it was Texas and Mississippi. Affected
I forgot. Yeah, you gotta make sure your state is state's May 15th. Your state still may be April.
Yeah. So your states are still April, but for the few states affected by the hurricane, I believe it was, they already have till June. So you don't get an extra month. If you're inside those states that you got an extra, what was it, 2 months because of the hurricanes, you actually don't get they said that you get an extra month to pay your taxes. Don't add an extra month if you're in June because of a special circumstance like the hurricane. You're still.
You're saying 15th. Okay, just because everyone else got an extra month doesn't mean if you already had in regular extension, you don't get an extra month. Okay, got it.
Yes. Thank you. Yeah, that's what I was trying to say.
I was like, what the f is trying to say?
I was like, this isn't going where I wanted to go.
Yeah, no, man.
But yeah, you get what I'm saying.
Tax season's always so stressful, man. It's just like getting it done is a thing, and that's my biggest thing is just putting it off. I procrastinated a lot, like Drake said. Haven't done my taxes. I'm too turned up.
Yeah, so that's the way that's for taxes. But with the end of the quarter comes a lot of things. So that's the tax part of it. The other part of it is getting ready mentally. This started out a super hot first quarter. I mean, we had AMC, GME, Sava, go nuts in January, and then things really kind of cooled out the last 6 weeks. But I think that the way that I look at it is that this has been a massive consolidation zone, and I think that we're poised to move up from here. And I think that once the algorithms do turn on again, especially inside the small cap land, and we're seeing that like I think that that's when what we have to be ready for, because right now it's just been about surviving. And so part of that is going back and looking and reflecting on your last quarter. You need to do this every single quarter.
Yeah, I think this last quarter was one of the big quarters of taken profits. You look back and you see all these things like GameStop, AMC, and just you look back and obviously anytime you want to maximize potential selling at the top sounds super smart.
Yeah.
But I mean, just there were so many of these where it was like just the gap ups overnight and then it was just drops and drops and drops. And I think reflecting over this past quarter, especially if you notice yourself losing big or chasing, could help you out a lot come Q2 2021.
Yeah. And I think part of the other thing is think about the journey. I wasn't necessarily, 10xing my account during GME and AMC. In fact, I wasn't doing that. And at that time I had felt like I was missing out because I mean, people from high school that I had known, or even fantastic traders that I've been talking to, they were killing it during that time and I wasn't. But now I've kind of been like, just consistently, and their accounts are going up and down like a roller coaster. So I think that you have to reflect on the journey. So that would be my biggest thing.
Just like looking back, this had so many crazy things. Like January was great. February had the meme stocks, and then March, it started out hot, and then it was like the death of the swings.
Yeah.
And if you held through it all, I mean, it like you could have evaporated all of January and February.
Yeah, and I think if this means anything, if you want to do this long term, this was a great example of where risk management was everything. Everything. If you were that type of person that had 100% or 120% of your account on the street during this time, then you took a hit. Now, if your account went 5x from November to the February, and then now you're down 20% from there, okay, that's okay. Because
that's 400%. I mean,
500,
you take out 20%, that's not. Yeah, you're at 400% of where you started out. It's still a decent one.
Exactly. Think about that, okay? And think about the chart, okay? You went parabolic, now you're on a dip. So now you need to come back and you need to, you need to hone in. Maybe it's, if you had a tough quarter last quarter, you need to come in and you need to take your average, you need to take your, like, let's say your average starter is $1,000 and bring it down to 500. Build that confidence up, but also make a little money and prove to yourself that you can still do this. Because once you build up that confidence, then you can start slowly adding to that starter, getting back to 1,000. And then now, once you have, like, let's call it 100 wins underneath your belt at that lower level, you feel confident to use that higher money.
Yeah. I mean, I think all those are great. I mean, just reflecting on, like we said, just reflect, and learn from it. I mean, you can't just say, oh, damn, I just messed it up. I should have done this. But I mean, start entering these with a plan. I'm sure if you look back and notice some of the mistakes you made in the first 3 months, you notice, damn, I was just entering this and I was just chasing. I got greedy. And yeah, I mean, there's so much to learn from it. I think there were so many learning experiences in the past 3 months, but
2 days later.
And I guess since today is Easter, big day about resurrecting, reviving, coming back. I think coming back is a huge thing in the stock market. I mean, like everyone always says, it's not about how many times you fall down. It's about how many times you get back up.
Definitely.
And you've seen in the past few weeks, a few people or a lot of people have really struggled even after like such a great start. I think we kind of need to talk about, with this new quarter coming up, reviving your portfolio. It's a 3-day weekend. Took Jesus 3 days. So got a little recoup in us and we're ready to come out the tomb green every day.
Yeah. I mean, we had some rest. The market, I think 2 things that are really going to help, and we touched on it, was seeing a lot of low floats run, or not even low floats, just seeing small caps run inside pre-market. We want to see something up 3, 4, 500% and hold there into open. We don't want to see what we've been seeing, which is, they go up huge at 6 a.m., come back down, and by the time that the market opens, they're up 40%. That's not bad, but to really ignite the small caps, we need to see that good movement. And CEMI on Friday and ACY are really going to help the cause. CEMI went from something stupid. It went from 3.5. I mean, after hours, it went from $3.50 to $5.64. And it closed at $5.55. So that could definitely be a gapper potential. And then, of course, you had ACY intraday, which went from $4 to $15. And so that's a perfect example of something that we want to see inside pre-market to really ignite the small caps.
So I guess one thing, obviously, we touched on it earlier. And for anyone watching the video, you see the wardrobe change and everything. It's all black now. It's funny because it's Easter and we're in all black. We recorded the first 20 minutes or so on Friday, on Good Friday, and then took a little time off, and now we're recording the rest. So that should explain the wardrobe change for any of you guys and my lack of hair. But I guess like we were saying about reviving your portfolio, and it's not just the market. I started watching Billions. I mean, you love Billions. And I mean, they talk about shorting. Well, if you're not shorting, you don't have risk management there. I guess for the people that not only were chasing, but if you weren't chasing, you were just swinging. Because I mean, you look at a lot of really good swings for the long term. And look at what they were down in the past 60 days, and it's crazy.
Yeah.
So it's even a lot of people with good plans, good strategies, still lost a ton of money. How are we reviving that?
Yeah. So I think a really important quote is you can be right in the stock market and still lose money because of your timing. I think that's one of those quotes where it's like you're like, yeah, that makes sense. But then once you really see it inside your portfolio, that's when it kind of hits you like, oh, shit, that's what it means. And so what I mean by that is like, okay, let's even take Amazon inside the .com bubble. Okay, Amazon at one point was down 87%. from its highs. And there was everybody, institutions selling.
Sorry
Nobody
to cut
wanted
you
touch
off, but are you just saying know what you own?
Yeah, to a certain extent, it's going to be know what you own. And I'm not saying that the small caps that we're swinging are Amazon, because that's.
But
not what I'm
let's
saying.
just say for things like UWMC, I'm not going to include a few of the other specs because UWMC just has a reputation of. People know about it. It's second biggest mortgage company, number one wholesale mortgage company. I'm not in it anymore just because of the downtrend it had. And then I had a crazy gain off of worthless options that just became valuable because it became a meme stock. And I got out then because, it was a sympathy off Rocket. But I guess what I'm saying is like things like that, it seems like a know what you own. You see the dividend, you see the growth it has, you see the CEO and how passionate he is. But it's like, at what point, if you're investing in that, do you say, can you cut as an investor?
Yeah, definitely. So a big part of being an investor, and I'm not talking just a trader, I'm talking more of an investment standpoint, is managing your positions. Okay, you can't just expect to buy something and it to never go under there. For instance, I have Visa inside my Roth at about, I have it at 133 a share inside my Roth, something like that. Just last year, it almost got down to my exact averaging point. And at one point, it was below my average since I bought the stock. So you can't just expect, to buy something as an investor and it to just immediately go straight up. And that's where it's really important that if you're an investor, you need to, one, on really, really good news, you need to sell a few shares. So if you guys, start tracking hedge funds, you'll see that on really good news, even though the news is really good, if the stock goes up 30% and the news is only helping out the balance sheet, let's call it 8%. So that's a 22% higher move than what it should have done. So what hedge funds will do is that they'll sell some there. And even if they're buying down 8% lower, that's a win for them. That's a huge win. So when you have good news, you got to sell some. And it's really about, as an investor, it's about really managing your positions. Because again, if you had just, if you said, okay, I want to put 300,000 inside UWMC and you had done it, let's call it 6 months ago, your position would be cut in like half right now. And so that's where it gets really important, to where you have to set up like a long-term portfolio. So for instance, I was talking to a trader, and I had told them that my plan for something like Baidu was to have a position. I have a position at 199, like 70 or something. Okay, if it goes underneath 175, I'll buy more. At 275, I'll take some off and I'll sell the rest around 300. So that's a plan for me that, okay, if it goes lower, I'm going to buy more. When it goes up higher, I'm going to sell some and lock in some profit, because just in case something like this does happen again, we can lock in profit. So it's really important that although the strategy of an investor is to buy and hold, it's also to buy, hold, and manage.
Okay, well, another thing, I feel like a lot of these new traders, they see all these wins. They don't see the losses from the big guys.
Yeah.
I think we should kind of touch on some, bounce back moments we had where we lost out. I touch on my September to August all the time. Or September to August, my August to September. And the way I always preface it is the last day of, I think, July was the day PRPO gave me my biggest gain at that point, which is $12,000. If I didn't get that buffer, I don't know where I would have been, just because I had just crossed 50 at that point. It took me to like 64, 65. And I had tickled that 50K again for the next month, 2 months. And it sucked. I never wanted to go below 50. And I think I saw it like once or twice. And if I didn't get that crazy buffer, I would have been tickling PDT line.
Yeah.
So, mentality is obviously a big thing. But like I mentioned, it was the last day of July. I had the big gain. The very next day was my biggest loss. it was seriously my
That's
biggest.
how it works. Yeah.
It's seriously my biggest red day until last week. I actually had my reddest day and then my second reddest day ever, Monday and Tuesday of this past week, and barely made it out this week green. But I mean, I've always kept my losses to a minimum.
Yeah.
My biggest loss ever until, like I said, this past week was like $5,500. It was off SPAQ, Fisker now. The day after the PRPO game dropped from like 16 to 13 or something. I had way too many shares and it just dropped a ton. I lost a ton. And it was a start and I just didn't take it seriously. I was like, I made so much yesterday. This will obviously bounce. And it didn't. And I lost a lot of money. But I think like one of the biggest things like I took away from that was obviously the mentality. And then the following couple months, like I always say, there was those days at the start of the week where I said, I should sell everything. How much lower could it go? And then, by the end of the week, I'm saying I totally should have sold. So, and obviously ONTX, failed phase 3 data. There's not much you can do for those. But it's just when it does come to bouncing back, I played my strategy that whole time and I just added more risk adverse options to it. Like I started hedging my plays. I started playing smaller if I need to. There was actually a point in November, December where I was putting in like 3,000 shares of something where just 2 months earlier, I was putting in 7,000 shares of something. And I was thinking like, why aren't my gains getting this big? And I was like, oh, wait, I'm not putting my amount of shares in. And the thing I learned from all of that was obviously just risk management. My biggest loss then was around $5,000. I just surpassed that biggest loss. 6 months later, account around 7 times as big. And I just had my first 6,000 loss day. So, I mean, I was happy with that, knowing, okay, if this is my biggest loss, it's barely 1% of my account. I learned from my past mistakes, and I was happy with that.
Yeah, no, that's awesome. And so with me predominantly being a swing trader, one day, one week can make my entire quarter, if not year. So
how can you say one day, one quarter can make your entire, or let's say you can say one day can make your entire quarter, but can one day ruin your entire quarter? Or is it just because
so
you don't lose until you sell?
Well, so the first avenue that I'm going to give, so first I'm going to give the sob story. For instance, this January, I was super like green, like I was having a great year, off to a hot start. And then Sava hit, SAVA, and I lost more than, less than 7 figures, more than 500,000 on it. And that ruined that ruined a good chunk of what I was up going into the end of January. And that was mentally just like killer because
makes that whole January feel like a waste.
Yeah, exactly. And so where it usually works out that like I don't make anything and then I make a lot. So for me to make a lot and then lose a lot was a lot and was mentally tough on me. So that was the end of January, and it wasn't like I didn't go red on the year, but that was a lot of money because, like I said, it was my first loss over $500,000, and that was tough. And so I had a beer that night, and it was actually something that made me feel better that my dad said. He said, not many college seniors can lose 500,000 and not want to get up the next day.
Dads are the worst at tough love, man. I feel like every day. I remember one day I was like, he's like, how much you make today, son? I was like, 12. He's like, oh, not bad. My mom goes, $12, jokingly. My dad responds with, nah, 1,200, right? And I go, no, 12,000. He goes, oh, okay, not bad. And I go, okay, if 1,200 is not bad and 12,000 is not bad, what is the line for, damn, son, that's pretty good? He's like, 2025. And I was like, but every day I have a red day. he'll just be like, that's part of the game, son. You back in it tomorrow. There's plenty of time left. So it's one of those things, man. They know how to get you.
No, my favorite was I had like a pretty tough day one day, and Zach Morris had like a $4 million day or something. And I think it was my mom. My mom goes, why don't you follow Zach Morris a little closer next time? And I was like, oh shit, like really? Like so
just anytime I'm in the same place as Zach and I'm like, oh yeah, I'm like, oh, we're rich. Well, I'm rich. You guys are poor. But you guys are closer. You guys are closer now. You're welcome.
Yeah. So let me see. So that was a time where, just recently where I was having a killer month, and then literally one play, one day, 1 hour, like honestly, it was 1 hour, it had just destroyed, a good amount of profits. I think it was like 2 or 3 weeks worth of profits at that time. And so that was one time where it was mentally just super tough on me. On the flip side, last January, so 2019,
right before the Corona crash.
Yeah,
no,
right
2020. 2020. Sorry,
2020. That's what it was. Yeah, I was inside Costa Rica with my family, and this is when all the oil, nonsense was going on, and so
Saudi
what I had
Arabian news.
Yeah. And so what I had done was that obviously I knew all the low float oils, and so what I did was that I just took like 70% of my account and I put it in any oiler that I knew, and I was like, I went to go out a few beers, and I was like, I'm going to wake up tomorrow and I'm going to be freaking, my account's going to double. Like, this HUSA goes like 300%. Like this is blah,
man.
blah.
I was in HUSA big. I lost on HUSA. Yeah.
Yeah. And so I wake up, first off, I woke up.
Damn you, buy, sell short.
Yeah.
You got that play. You got that play from him too?
It was HUSA. What was it? USEG. There were so many.
My big one is HUSA because that was lagging behind the other ones, and BSS was hammering it, man. And at that time, I was a BSS disciple. He said it. I was in it, man.
And so I was like, oh man, I'm gonna wake up rich. Maybe I had one too many beers than like I should have, and I actually woke up late for the market, which like I never do. And I was in Costa Rica, like I was having a great time. I opened up my laptop, my account is down 20%.
Was this a Tuesday?
It might have been a Tuesday.
I think it was a Tuesday because I had the same thing, and I remember I was working at that time, and I had I also, like I said, was heavy in HUSA for me, like $600 at the time. But I had my work meeting, and it was right. Like the minute the market opened every Tuesday. Yeah. And I remember getting back and I was like, HUSA did not do what I wanted it to.
Yeah. I was like, how the fuck overnight do we go from an all out oil, like, oil squeeze to, nah, shit's cool again. I was like, what the hell? So I lost.
We got to worry
20%.
about this coronavirus now.
I was like, what? Like, where's this switch up? Like, this is ridiculous. So I'd lost 20% of my account overnight. And I just like, it was one of those times where I was like, I wasn't focusing and I was trying to make a quick buck. And I felt, I had deviated from my strategy because I was in Costa Rica and I was just, fucking around, honestly. And so I had started out last year down 20%, and that was super tough. And then, I had lost my confidence for a little bit because 20% of my account, I hadn't done that in 2 to 3 years. So it wasn't necessarily the nominal number. It was the fact that I was like, oh shit, what? Like I can still lose.
I guess this is kind of like a hater's podcast review. But at the same time, I question myself for this a good bit. You think like the crazy market we've been in, you've made obviously a huge percentage of your wealth after this crazy market has started. Me, 99% of my wealth. And there are times I'm like, if this stops, can I continue making money? Can I continue? Just being great in like something where a lot of people aren't. What keeps you confident that, you have a market like just a regular 2005, 2006, and, just a regular ass year. What gives you that confidence that you could do that?
So I'm a little lucky, and not lucky, but in the sense of, I've had multiple 1,000% years. In fact, I'm not trying to even hit 1,000% this year. I mean, that would be sick. But, I think for me, when I get asked that question, I'm like, well, who the hell cares? Because like in 2017, 2018, I was doing 1,000%.
Well, I mean, yeah, like as of right now, I mean, you have enough money to retire as a 22-year-old and live comfortably forever.
Yeah.
Congratulations.
Yeah.
But I mean, like,
I understand where you're
I
going.
mean,
Yeah.
like the thing is, like, obviously me, bull market,
Yeah.
basically from my downturn to upturn,
Yeah.
and then it's up, up, up. I had my August, September. I was fucking scared. I literally was like, damn, do I start? I was like, I got to either start hounding content more, podcast more, or find a job. I mean, because like it just wasn't working.
Yeah. So there's a few things I think that we can kind of put this in there. 3 super good things that you have to remember if you're going to do this for the long term, because eventually the market's not going to be as hot as it has been. So first thing, and this is someone who I was talking to Dave from Breathe Carolina actually this morning. And one of my biggest pieces of advice is that when we're inside a hot market, press it, like go for that
Strike
extra
when
mile.
the iron's hot, man.
Yeah, exactly. Strike, you know what I mean? 5x your account. But then the second that we use the analogy getting punched inside the face, second that you catch that first cheek, be done. Okay.
Yeah,
now you got to scale back.
I think one of the biggest things for people not scaling back is because let's say you go up, I think we mentioned this earlier, you go up 500% in 6 months. If you take a 20% hit the next month, that is essentially 100% of your portfolio 6 months ago. Yeah, it fucking sucks, but you have to realize I've made this much. Losses do happen. And to prevent further losses, this is what I have to do. There is no shame in taking these losses.
Yeah. And so that's the first thing, is that strike when the iron's hot, and when it cools off and you get punched inside the face, scale back. Like I'm talking, like if your starter's $1,000, bring it down to $250. Regain that confidence while you're adapting to the new volume.
Never be afraid to take all your money out of the market one day.
Yeah.
Wake up the next day and you'll feel relieved.
Yeah. And so that's number 1. Number 2 is going to be is that if you start taking losses, walk away, because that's where you get into trouble with revenge trading and oversizing. One of the things that I used to do to myself when I was starting out is that I would go on like a pretty good hot streak, and then all of a sudden I would take like 3-4 losses in a row and give up like 2-3 months worth of gains. And then what I would do is that the next trade, I would double my size, and then I would lose on that. So then I would quadruple my size and keep getting bigger and bigger, even though I had no confidence and nothing was working. And so if you find yourself doing that, the best piece of advice that we can give is go back to that beer money. Okay. And this is anything in life. Okay. If you go on a hot streak and then you start to get cold, scale it back and go back to what you started with. And hold it like that, because that's going to be what digs your grave, is going to be if you go on a hot streak, start to get cold, and then get bigger.
One second. I got a quote. You guys ready?
Yeah, let me hear it.
Being able to return to moderation is your key to salvation.
Oh, is that like an Easter quote or something?
Nah, man, I just made it up right now. But moderation's like, everything.
Trademark that.
And then salvation, like that's your key, financial salvation. Now, Hugh, what's rule number 3?
Now, rule number 3, and this one, okay, this one's going to be something where, rule number 3 is going to be sometimes it's better to just walk away. And what I mean by that is that we didn't see Zach Morris for 2 or 3 months inside August and September.
It's because he moved to Bermuda and was dealing with SEC investigations.
So what he was literally just chilling, and that's because he knew that when the market was hot, he was at the screens for 16, 18 hours a day. But when the market wasn't hot, he was hands off, chilling, enjoying his life, enjoying the outside.
I mean, I mean, you can enjoy, but at the same time, you saw him playing these large caps like Tesla, where I think it was a mixture of things for Zach. Weird example, because it's like you see him and he was like, people are calling him a pumper. He said, screw it. I'm going to make $4 million in a day, not post a damn thing. And it's all on Tesla and Amazon. And then, but also it's like, it's not just take a break from trading in general. Although, yeah, that's a good idea a lot of times. Sometimes it's just taking a break from that sector or that, small caps. Taking a break from small caps are exhausting. Small caps are a lot of work. They're risky. They can go bad quick. They're unreliable, but we love to play them.
Yeah, we love to play them. And that also doesn't mean that you go into like Amazon and you hold Amazon for like 200%. Because that's also like you have to understand that okay, small caps is one game. And then if you're going to blue chips and you've never traded blue chips, you have to come in with that same mentality of beer money. Because although everybody
just started trading again.
Yeah, because it's a completely different game. I trade large cap options, and it's a completely different game. If you walk in there, and I'm even talking with like a few $1,000s, you can get smoked. And that is why it is so important to, one, manage your risk and have a plan, because everybody talks about it, but like, what did SPY move? SPY was moving, SPY, I'm looking at it, had moved $5 inside the past few hours. Like if you're short, like that's blow upable, because SPY's at 400. So if you buy 1,000 shares and you go on margin, because again, you're trading with large blue caps, so you can go on margin, and the margin percentage is less than small caps. Small caps, you have to have like 100% equity or like 75% equity. On blue chips, you can margin yourself out the wazoo. So, and that's where you can get dangerous, because if you just buy 1,000 shares of let's call HUSA is like $4,000. 1,000 shares of SPY, and if that thing goes down 5%, or let's call it even $5, that can be blow up territory.
Okay, I'm gonna give one more thing, and then we can kind of wrap it up. Yeah, I think one of my probably favorite qualities I found in myself as a trader is I found options. I've made a ton off options, but the options gains has never been because I put in $10,000, $20,000 into the options. It's far out options where I'm basically playing scratch off tickets. But instead of scratch off tickets, I know at least which ones to get. I know decent, like the AMCs and the ones that went from 7 cents to $11. I bought that $7, sold at $1,150. I'm not risking a ton on them, but if you can accept options can give you crazy gains, but not risk everything in them, play them. But if you can't keep yourself from going crazy, I mean, stick to common.
Yeah.
Okay.
But what I was going to say was that the other thing is that if you're starting out with options, again, completely different ball league. So one of the biggest things, and we touched on options one, if you guys haven't watched that, go back and watch that. But listen to that. But one of the biggest things is theta decay. So if you buy, let's call it Tesla call option while Tesla's going down on Friday, and that option is expiring at that day, most people don't understand that option, if the stock does nothing, will be worthless in about 20, 30 minutes whenever that option is expiring. So if you are starting out with options, understand that there's so much more to it than just, okay, I buy this. If it goes up, I make a lot. If it goes down, I lose a lot, because there's so much more involved in that. And that's the only thing that I want to touch on that.
Okay. And last thing, I know we touched on LTNC earlier. I'm not sure if Vinny wants to add this then, or if he's just going to add it at the end. But regardless, I feel like what we did on Friday was a little lazy. So it's just really good. And by no means do I want to spit bear sentiment, to bash anyone in the stock, and to convince anyone to sell the stock. Again, we're not financial advisors. We don't know everything.
We don't have college degrees.
Obviously, there has been a lot of negative sentiment from people we are associated with, and even Hugh himself, regarding LTNC. And like I said, I don't do DD. I don't do anything like that. I don't know, but I do want to know. So obviously, Hugh, there's been a lot going on. You've talked down upon the stock a little bit, mainly upon CEO's charges. I haven't dug into them too much, but I do know one of the main critiques of that comment is that is not the current CEO.
Yeah. So let's go over a few things. Okay. One, I just want to touch on the fact that, listen, if you're using it as a trading vehicle, please make your money. And I wish you the best. Okay. We never want anyone to lose money from the short side or the long side. None of us have positions. In fact, I never trade over the counters. None of us trade over the counters. You won't see me touch over the counters. And one of those reasons is because of the regulation or the lack of regulation. If something happens to an over the counter to where it gets flagged, let's call it, then they'll just halt it. They don't care. They'll just halt it. Okay. And so my issue with LTNC is a few things. And again, they're red flags. Okay. I'm not calling them a fraud. Okay. If that comes out, then that is what it is. But what I'm calling them is that there are a few red flags where if you're an investor, I have questions. And so if you're an investor inside any company and you're not looking for red flags, then you're not doing your job as an informed investor. If you're trading it intraday, this does not matter to you. But I just want to bring up a few things. One, a quick Google search says that the market cap of LTNC is 557 million. Okay. They are a pre-revenue company. I saw a screenshot yesterday that they took pre-orders for 260,000 or something. Okay, so let me put it this way: they have revenue of 260,000, and the market cap is 550 million. Okay, we can go into more valuation standpoints, but would you pay 500 million for something that brings in 250,000? Okay. That's a personal choice. But the other thing, and this is what Dan touched on, is that the former CEO, who still owns, I think, about 9.5% of the company, has charges against him like armed robbery, or it's something like that. Okay, don't quote me on that. Okay, it's a serious offense.
I have dumbass charges from when I was 18.
But you're not trying to, there's a difference. Okay. I totally believe that there can, again, I honestly forget your charges, but
yeah, I know. But armed burglary or whatever his was, or you said it was, is definitely worse. It's a bad crime.
It's definitely worse.
Like taking into the year it happened as that's totally different. They're totally people. It's Easter, Hugh. People make changes.
I'm not saying that, but here's the thing. No board in their damn straight mind is going to say it's okay. Okay. There are boards out there that won't accept people because of a parking ticket. Because you got to remember is that public perception is everything. So if you're telling me that they have this super great, blah, 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 hydrogen water, there's no board that is going to take the chance of a short seller ripping up the company because of the CEO's past.
So maybe that's why he's not the CEO anymore.
But he wouldn't be the CEO to begin with. And he's not the founder.
Maybe it was a shit company. He was making a buck. He realized he had a good product.
Yeah.
I said, I don't know the fucking company.
I know,
but
I know. And I'm just bringing up red
aside
flags.
from burglary, aside from the CEO, I mean, if you're asking me, I think, some people are throwing around $2. I think, for an OTC to go $2, that's extreme. But I mean, hey, it could happen.
I mean, it was trading at 5 cents last week.
No, it was trading like fucking 3 cents. And now it's trading at 7 or 8. I mean, it's moving up though, is what I'm saying. If it keeps moving at that pace, it's going to be there in a month and a half.
Well, here's the thing. Well, I mean, that would be quite a jump, 8 cents to $2.
No, I know.
But there's being other. So let me just recap. One, the valuation, $557 million market cap is absurd. Two, some questionable backgrounds of former management. Okay. The next thing is that hydrogen water has been debunked by tons of scientists. So if it's been debunked, are you telling me that this over the counter has,
I
has the
personally
best scientists?
I personally would never drink water out of a can. So that's my personal reason behind not investing. But I mean,
okay, now here's the other thing. Okay, on I believe it was Friday. I believe it was Friday. The new CEO said that they're having an issue getting approved by the OTC markets, and so they can't get approval from OTCM. And so why can't they get approval from the OTCM if there's no red flags that the OTCM is looking at? Okay. And then the other thing that I want to point out, and this is something that OTC Lloyd pointed out to me, was that the 6.8 billion shares were given away to dilute enough ownership so that Ryan, okay, the former CEO, falls just underneath 10%. Like I was saying, about 9%. Okay. His shares are worth about 100 million right now, and he does not need to report his sells. So my point is that why wouldn't he convert these to preferred shares or sign a lockup document? Okay, his word means shit to me, again, because of his questionable background, and even still, nobody's word means anything to me. So right now we're looking at a pre-revenue company with a valuation of 500 million, with questionable former executives. And on top of that is that at any point, this guy can just dump his stock, which again, is worth 100 million, and he can walk away, which, you know, I'm seeing a lot of comparisons out there to TBEV. Okay. Same thing. The stock went super parabolic and then they dumped it and they never heard from them again. And so my point is with all this is that, listen, if you're using it as a trading vehicle, fantastic. Hats off to you. Make your money. If you're a long-term investor and I'm asking these questions and you're not, we got issues, brother. We got issues.
Okay, look, man, we're just saying, I think what he's trying to say is if you're trying to get as wet as possible in the shortest amount of time, you go into the water regardless if it's red flags, yellow flags, or green flags. However, may not be as safe in the red flag, but you can get wet really fucking quick in those red flag waters. It's very, very shaky, maybe a shark or two. But with that being said, you know, we do want everyone to make money. It'd blow our minds and it'd be an absolute treat to us if it went to $2. We hope nothing but the best for the investors. And with that being said, any opinions on LTNC will only drop on the podcast. We're not going to involve ourselves in petty drama over Twitter.
Don't at me on Twitter.
Yeah, don't add us on LTNC just because someone else we associate with talks about it. Like, we're sorry, but that's them, dude. We're all grown-ass men and women here. And, you know, if they want to talk something, take it up with them. But we're going to give you our thoughts. I mean, I know we dropped this on Sunday, but the next day, I mean, it's face to face. We're saying this to you right here. We'll give it to you in front of anyone, but we just want to be honest with you guys. We want to be straightforward. We're not in the stock. We're not shorting the stock, and
we don't touch over the counters.
We have no benefit from it, regardless. He said we don't touch OTC, but you know, I've been in mine.
Okay,
for like a year and a half.
don't. Yeah.
Yeah. No, I have no oppositions to it. So
I mean, that was a good play, right? That was a pretty good play.
It went up at 10,000% from 0.0001 to like 1.5 cents. It's back at like half a cent.
Oh yeah,
whatever. But guys, thank you so much. We hope you guys have a great Easter if you celebrate it, and if not, we hope you enjoyed a solid 3-day weekend in the market. And we'll see you Wednesday. We're gonna try to have a solid episode for you for Sunday as well. We'll be in Houston, Texas, for the Breathe Carolina show. And the winner of the Stream Deck, sorry, this is super last minute, totally forgot to announce, is a guy named on Twitter, Stinson Stocks. Will reach out to you. Longtime listener, and I saw his tweets, I saw the reviews. You know, what really stuck out to me is that he said he would love us even if he didn't get the Stream Deck. So let's hope, even though he gets it, he still loves us. Hell yeah, guys. Let's get it, and we'll see you Wednesday.
Boom.